a small venture company based in Utah, United States, claimed it could embed thinking capabilities into industrial robots and unmanned aerial vehicles, commonly known as drones. The name of the company is Palladyne AI. On the surface, it seemed like just another small, unprofitable tech startup, but something was off. Despite reporting an annual net loss of $4,500,000, this company's stock price surged over 420% in just 1 year, pushing its market capitalization beyond $380,000. What made this company rise like that? What was the market seeing that justified such explosive optimism? By the way, the analytical techniques used in this video to examine Palladyne AI are featured in several books tagged in the Product View button on the lower left of the video. Some of these books are currently on sale, so we recommend taking a look if you're interested. Palladyne AI directly challenged the limitations of traditional robotics by presenting a new concept, embodied artificial intelligence. Embodied AI goes beyond processing data. It enables robots or drones to learn and make decisions through their physical interactions with the environment. The company's goal is to embed this intelligence into robotic systems so they can independently adapt, collaborate, and operate in real-world conditions. The first product developed with this approach is Palladyne IQ. This software is applied to multi-joint robots that function much like a human arm. Typically, deploying an industrial robot in the field requires hundreds of lines of custom code, manual teaching by engineers, and detailed adjustment for each task. However, Palladyne IQ is designed to eliminate that complexity. Even in low-code or no-code settings, the robot can autonomously recognize and learn workflows and act with human-like flexibility. In July 2025, this product was demonstrated live at KUKA Connections, Nexions, an industry event hosted by the global robotics company KUKA. During the demo, the robot didn't simply repeat programmed motions. It responded to conditions, showing real-time judgment and intelligent coordination, capturing the attention of automation experts around the world. The company's second flagship product is Palladyne Pilot, an autonomous flight control software for drones. In December 2024, it was successfully deployed on a commercial small drone, enabling it to identify and track moving targets autonomously, without external commands. Ordinarily, drones operate along preset flight paths or under direct manual control. Even those labeled as autonomous typically function only within limited environments, but this software demonstrated a whole new level of autonomy. Then, in January 2025, Palladyne AI partnered with U.S. drone manufacturer Red Cat to demonstrate multiple drones conducting cooperative flight missions under limited communication conditions. That same month, the company secured a 26-month contract with a U.S. Air Force research agency to port Palladyne Pilot onto next-generation AI semiconductor chips. At this point, the technical story sounds highly compelling. But this is also where the real mystery surrounding this company begins. First, there's something unusual about the company's revenue structure. Annual revenue stands at just about $4,300,000, primarily from defense contracts and pilot programs, mostly one-time engagements. Normally, tech companies are expected to generate recurring revenue through repeat product sales, maintenance, and upgrades. Palladyne AI has yet to prove that it can establish such a recurring business model. Second, in August 2025, the company registered a shelf offering for up to $150,000 in mixed securities. This is typically done to allow flexible capital raising in the future. The strange part is that the company already held more than $60,000 in cash at the time, with no immediate liquidity concerns. Usually, shelf registrations are initiated when a company is facing liquidity shortages or preparing for large-scale investments. So why did Palladyne AI make this move preemptively? Was it a sign that internal projections anticipated a faster cash burn rate? Or perhaps the company was positioning itself ahead of a major contract? Either way, for investors, this raises uncertainty. Third, the company's short interest is exceptionally high. The estimated short interest is around 6,300,000 shares, representing over 20% of the total float. Normally, high-growth tech companies with strong long-term prospects maintain relatively low short interest. Why, then, is such a significant short position placed on this company? It could be interpreted as a strong signal that some market participants believe the current valuation is excessively inflated relative to fundamentals. So we must return to the core question. Does Palladyne AI truly have the intrinsic value to justify its current market capitalization? One potential justification lies in the scalability of its technology. Embodied AI, by design, can be implemented across multiple robots, drones, and various military and industrial platforms. This enables both high scalability and cost efficiency, potentially leading to exceptional margins. Another possibility is rooted in the nature of the defense industry. If the initial U.S. military projects conclude successfully, they could lead to long-term supply contracts, which offer recurring revenue and stable demand, unlike the volatility often seen in the civilian sector. The fact that the U.S. Air Force has committed to a multi-year AI chip integration project could signify the start of a broader strategic partnership. But both of these are still just hypotheses. None of them are yet confirmed realities. Investors, Palladyne AI is not merely a speculative theme. It may indeed be creating a turning point in the real-world deployment of embodied AI. But at the same time, its revenue model, contract conversion rate, and strategic capital use have not yet been thoroughly verified. The company's current share price is built on expectation, hope, and the promise of futuristic demos. But if these narratives do not materialize into concrete revenue, contracts, and repeat sales, the market may eventually respond with sharp realism. Whether this company truly becomes the brain of the world's robots and drones is a question that will be answered not by stories, but by quarterly numbers. And if there's any public, private, or soon-to-be listed stock or crypto project you'd like ValueStir to investigate next, please leave your suggestions in the comments. Your tips guide our next deep dives. This was ValueStir.